The daily video you are about to watch will require a paid subscription to WickedStocks.com beginning Tuesday, March 1st. Become a WickedStocks.com premium member to continue receiving our daily SPY report, our daily Triple Q report, our weekly DIA, IWM, and Bitcoin reports. Monthly subscriptions start at $25 a month. If you're not ready to become a premium member, I encourage you to become a basic member for free, which will alert you once these analysis videos become part of our paid subscription plan on March 1st. We will continue to offer free and valuable content on YouTube, though it will not include the series of videos mentioned earlier. We hope you become a WickedStocks.com premium member. We offer a 7-day free trial, and cancellation is allowed at any time. Hi, this is Kerry Artak with Wicked Stocks, bringing you the Daily SPY report for Thursday, February 24th, 2022. Before we jump into the charts, as usual, I just want to ask you to please click like for any Wicked Stocks content you see on the Wicked Stocks YouTube channel. It does help us out a great deal in being found when anyone searches for material consistent with that video that you've liked. So liking it is truly, truly appreciated. And subscribe. Subscribing to the Wicked Stocks YouTube channel will provide you notification each and every time new material has been uploaded to the Wicked Stocks channel. It's always sort of in the moment, pertinent for that time, and as time goes by, it wanes in its relevance. So you want to see it early on, certainly before the opening bell. If you're looking at the daily SPY report or any daily material, that's to your advantage, so you can have it for your own use and preparation for the day ahead. Let's take a look at the charts. A big sell-off again. I don't need to tell you all the news, you know it. So we're just talking the technicals here. That is the true purpose of Wicked Stocks, technical analysis. We came very close to testing that 420.76 low from January. It remains a level that can contain weekly selling pressures. We can double bottom from here into March trade, and from here over the next few weeks rally back into the upper 450s. This is a sort of a new horizontal channel structure that is my primary sort of resistance. As we continue into later March, we can top out there for at least a week, possibly through the balance of March, and if settled above, would indicate for me that this correction is over, and that we should continue moving higher as we move into later Q2. But we're a long way from that right now. We're in the midst of testing 420.76, and there's reason to consider the possibility of actually violating it today, maybe even opening below it. This is the Triple Q, and this is kind of what I'm alluding to. The Triple Q did close below its long-term support that today is at 330.94, but it did not do so by a 1% margin. That's important for me. I've seen this so many times where the market closes below or above a key long-term line study inside the 1% zone, and that's still considered a mere testing. So we are still merely testing long-term support in the Triple Q. That's not to say that we won't gap lower tomorrow morning, rather Thursday morning, and continue south in the Triple Q. That is certainly possible. But as far as the settlement goes on Wednesday's close, there's no real clear sell signal just yet in the Triple Q, and we can very well be placing a long-term low here at 330.94. So I just wanted to put that out there. I guess I should just invite you to watch the daily Triple Q report for Thursday, so you get a sense of that. Let's take a look at the support and resistance in terms of the downside. So if we and I say here 420.76 can contain weekly selling pressures, and above which that 458.54 channel top is in reach over the next few weeks. But if we break or open today below 420.76, I think 414.28 is likely. I see there's a double print there. I don't think I'm going to correct that. 414.28. You can see how I've got two of them there. I'm not quite sure how that happened, but 414.28. The first one is 418.44, and then 414.28. They'll just put a red line through the middle of that first one because it really is an intraday support level. In other words, it can contain initial selling pressures, possibly for the day itself, but I do think as if we continue spending a lot of time below 420.76 instead of just sort of a spike low early in the day down to 414.28 and back up above 420.76 as the day wears on, we can quite easily break 414.28, and the 406.38 long-term support level is then in reach. This is the start of a wide zone that you can see here, 403.76 to 406.38. That is a combination rising channel bottom, as you can see, and rising two-thirds speed line. So that is a long-term, rising one-third speed line. And so it is trend defining in itself. The trend defining speed line is at 406.38, the channel bottom at 403.76. This is a significant zone of support for the SPY. I've been mentioning how it's long-term, able to contain annual selling pressures, and from there we can trade higher once tested as we move into later year. But there's also a 401.92, as you can see, in the support and resistance, and that is nothing more than this descending channel bottom. So if we close below 420.76, for instance, we should actually continue in that low 400 area within just a few days, possibly tomorrow, being a Friday and all, coming into the weekend with what's going on in the world. If we close today below 420.76, we should continue south. I'm going to say tomorrow into that very low 400 area. We could do it today if we gap below 420.76, but I think it's likelier to be tomorrow. That 401.92 up to 406.38, and those two top numbers, 403.76 to 406.38, are the big picture levels, the long-term support that can contain selling through the year. That 401.92 descending channel bottom I just showed is really more the slippage factor against 403.76. So, we can break 403.76, test 401.92. We could even close below 403.76, FYI, because we need a full 1% violation of that level, which would be below 401.92, to set off a long-term sell signal. Let's take a look at what the consequences would be if we did close below 403.76 by the 1% margin. I'm not putting it out here because I don't think it's likely today, but you could do the math if you wanted to. Just 4.04 minus 403.76 is going to put you in the upper 390s, and that level, if settled at or below on any day, would set off a long-term sell signal for the SPY. And just also know that by that point in time, the triple Q would have also settled clearly below its long-term support, presently 330.94 today, and has yet to settle below that formation by the 1% margin, as I mentioned earlier. But if we did close below 403.76 by the 1% margin, I think we go from a correction, a mere correction that we're in the midst of now, to actually a bear market. And I would then expect 349.12, I'm going to say within 2 to 3 months at the most. I actually think it would be more like 2 to 3 weeks. And you can see that 349.12 is a 50% downside retracement from the 2020 COVID low of March 2020 against the more recent high in December. But I wouldn't put a lot of weight on that 349.12. I just think it's a nice bounce area for a number of weeks. I think overall, closing below 403.76 by the 1% margin, I do think 312.45 is in reach. Now, to say that I'm expecting it, that's a bit of a long shot, but I do think, and by the way, it's speed line analysis is all this really is. The rising one-third speed line at 406.38, if settled below by the 1% margin, the target becomes the rising two-thirds speed line. That's speed line analysis. That's the method you use. So if you close below a rising one-third speed line, the rising two-thirds speed line becomes your objective. Is it inevitable? No. But I do think we are setting up for what could be a pretty ugly scenario. I don't see that yet, and that I need to emphasize this too. I fully believe that 403.76 to 406.38 area can actually contain annual selling pressures, and from there we can bottom out and turn up beyond the recent highs in December within a matter of 3 to 5 months. As we continue to mid-year, August, September, we could certainly push on to new highs. But if we close below that 403.76 by the 1% margin, that is the setup for an ugly scenario whereby pretty quickly, within a matter of a month or two, we could fall to 312.45. I don't know what the circumstances would be, sort of facts on the ground, if you will. But the technical analysis that I see would allow that, certainly. So enough of that. Let's talk upside today. Holding above that 420.76 January low, 431.84 is in reach today, which can contain daily buying pressures. And if we close today above 431.84, I do think the 440.85 level is likely within just a few days. And that 440.85, as you can see, is really just a steeply descending channel top. But I do like it, despite the fact that it's steep. You know, the steeper the line study, the less reliable it is. But, it comes off that February high. It follows a sequence of lows thus far off that February high. So it's a perfect channel structure. And I think if you're just looking at this image holding above 420.76, I do think over the next 3 to 5 days we can test 440.85. It's just that a settlement today above 431.84 should actually yield it within 2 to 3 days. 431.84, by the way, can contain daily buying pressures. We could trade inside the 420.76 to 431.84 area for a good part of the day, but if we push through 431.84, 435.40 is likely intraday, and if we close above 431.84, we should reach that 440.85 level within just another day or two, where we can top out on a 2 to 3 day basis. We could top out at 440.85 and possibly fall back into the low 420s again within about 3 to 5 days. Closing above 440.85 would indicate that much more meaningful 458.54 within a week, two at the very most. And so really this kind of says it all. If we're just looking at the upside right now under the assumption that we hold the 420.76 January low, 440.85 likely over the next 3 to 5 days, make that 1 to 2 days if we close today above 431.84. And the 458.54 level in reach over the next few weeks, holding above 420.76, and make that probably more like 1 week if we close above 440.85. So there's got lots of good opportunities here for swing traders. You're looking at all of them here right now, whether you're a 3 to 5 day swing trader or a 2 to 3 week position trader. This is it. But bear in mind that if we close below 420.76 today, we should tomorrow test the 403.76 to 406.38 long-term support area, where we could bottom out for the year itself and turn higher into later year. It's also a significant downside tipping point as we move through Q2. I'm going to leave you with the support and resistance for today. I think I've said enough, 12 minutes and running, and I'll just leave it at that. Please click like and subscribe to the Wicked Stocks YouTube channel and consider becoming a premium member. Keep in mind that this content is going paid next week, but I think it's a very reasonable $25 a month to keep you tuned in, to the market flow and timing. I think we do a good job of that. So that's all I'm going to say. You have a great day, and I will talk to you tomorrow when we cover Friday's Daily SPY Report.